Thank you so much, everyone. And I think most of you were here for my introduction remarks. And I think it sort of augurs well if I start with this illustrious sort of panelist asking that how many opportunists and how many illusionists and how many enthusiasts do they have in their portfolio? I'll begin with you.
I heard that categorization only this morning, so I haven't done the math. But I have to say this, Shrija, that it takes all to make an ecosystem. You cannot rule out people just because you brand them as something. Tomorrow they'll come up with something else. That will be much better than what they're doing now. So really speaking, we talk to all the people, and then that's why there are thousands of deals that we have to go through to pick those few, and they're always based on the particular founders, not just founders, the problem they're solving and the solution they're building. So that's my answer to your question.
Okay. What about you, Davesh?
No, I agree with him. I think
You can't copy the answer conveniently.
no. Based upon my experience, and I'm sure everyone shares the same experience, that many a times, when we meet founders, they may have started their company with whatever agenda, but that doesn't necessarily mean that they do not end up being successful. At times, just the perseverance, just the will to succeed, overcomes all other shortcomings. So, yeah.
What about you, Ashwani? Maybe like a more realistic answer.
See, when you look at the journey of an entrepreneur per se, what eventually comes out as a success story may be very different from what they started off with. Okay, so whether you were an illusionist or whether you were enthusiast, what may come out may be different, and that's where it's a joint journey between the investors who have looked at multiple models which have been successful, which perhaps would be successful, because even none of us can predict into the future. And also the third aspect, which is the customers of the market, because that's the eventual reality which comes into play.
What about you, Anirban? You can give a safe answer.
As a lawyer, I'm required to represent everyone. But again, just to add to what you're saying, illusionists also have their place. When Flipkart started, it started selling books. Today, Flipkart is a very different company. Right? When Amazon started, it started selling books. Netflix started by renting out DVDs. So there's a place for illusionists if they sort of persevere.
Okay. That's sort of, I'm getting a unanimous answer that you can begin with something and sort of morph into whatever you want to be with your perseverance, agility, and really, really listening to the market and escalating the market feedback back into the product. I think it would be a good idea to sort of introduce sort of each one of you on how big your fund size is, what kind of companies do you partner with for the benefit of the audience here. Yeah.
Very quickly, Pentathlon Ventures is a SEBI AIF Cat 2 fund, headquartered in Pune, happens to be the first VC fund out of Pune. Our focus is early stage, that is early revenue stage, B2B tech startups. And this we are in our fund 2 now. The exact same thesis was there in fund 1 also, but fund 1 was very small. Now this time we are looking at, when we say early revenue, about 1 crore plus kind of revenue. B2B tech means where tech is disrupting B2B use cases. So we're not really talking deep tech, but tech disrupting use cases, so we can go across verticals. And with this fund, we are about a 450 crore fund, and which allows us to invest in about 25 companies while taking the lead in the seed round, which was not possible earlier when our fund was small. So we take the lead by taking half of the seed round. Seed round is roughly 1 to 2 million. So we take up or invest up to half to 1 million, that is 4 crores to 8 crores kind of money in the seed round. And then we also follow up in our Series A and Series Bs of the successful companies. So that's our thesis.
Sure.
So I run this early stage fund called CDM Capital, which I started a couple of years back. Prior to that, I used to be a partner with a mid-market private equity fund. So I have around 15 years of investing experience. In my previous job, it was mostly growth stage companies or mid-market companies, but CDM is an early stage fund. It's a 125 CR fund. I'm the sole GP. We invest in fintech, health tech, and SaaS. These are the three primary sectors that we invest in, and our check sizes are pretty much the same size as these. The first check is usually $500,000 to $1 million.
Yeah, Ashwani, what about you?
So we I've had a journey, some of us, quite a few of us come from banking background. We have run FIS into India, so we have seen multiple parts. So we have two fund series. One is what we call the India Discovery Fund series, wherein we write in checks at growth stage, which are typically from, say, 500,000 going up to maybe 2.5, 3 million part. And then we have the India Growth Fund series, which is a larger fund wherein we would start off at about, say, 3 million, going up to maybe a 15, 20 million plus. So that's a part. The India Discovery Fund, we are doing the second series of it. It's a 500 crore fund. And the India Growth Fund is a 2,500 crore fund.
Okay. Anirban, you can maybe talk about from a still much perspective that how deeply you work with startups across what areas.
So, hi, I'm Anirban, partner with Cyril Amarchand. I am a technology partner. Um, Technology we look at as a horizontal rather than a vertical. I've done investments from up to 1 million to 1 billion. So there's no sort of threshold in terms of the clients we represent. We've looked at startups, we've represented multiple VCs and Ps into investment. And what we also do is beyond investment for a lot of startups. They realize when the investment sort of happens, what are the lacunae in their businesses, and then they sort of reach out to us, and we help them navigate their journey so that the next fundraising round becomes easier for them. They sort of are a little more compliant, and then the growth from a compliance and a legal standpoint side sort of grows as the company grows.
So thanks for that, gentlemen. Now sort of we can straight deep dive into the conversation. I'll begin with you. You said that we invest quote unquote disruptive. I think that's the most abused word in the startup ecosystem. Like we are disruptive, we are doing, everyone is disrupting something or the other, right? So when you are doing a diligence on a startup founder and now with this entire avalanche of AI and generative AI, I mean, how do you distinguish between what really is disruptive to what it is not? I mean, can that really be quantified? Is there an art or a science to it?
Sure, I'll take that. That's a great question, and I'll very happy to answer that. The first part I would say is that technology itself has been the biggest disruptor, and you cannot deny that. That has been happening from the 16th, 17th century since the steam engines came, right? So what we are talking about is tech disrupting the business use cases, and that is very much a valid thing, not just today but for centuries on. And that is indeed why I clarified that when you're talking about tech, it is not deep tech, but it is disrupting a particular business use case across the verticals. Now, how do we differentiate ourselves? Because when you say much abuse, yes, everybody is talking about that because everybody is talking about tech disrupting the business. How do we look at that? It's a very interesting question because last year, when GenAI came along, I was always asked this question that GenAI seems to be like a tech giant kind of a play. I mean, who else will have the wherewithal to build the LLMs, the resources, and so on? And so the question to us was, if you are early stage B2B tech, what is the opportunity for us, for the younger companies in this GenAI world? And of course, I researched that it ended up being a 4-part series of articles on LinkedIn. And the space that we found for ourselves or for the kind of startups that we invest in is this, that what do these tech giants have? Where does their data come from? It comes from social media. Whereas when we are talking about B2B, when we are talking about enterprises, the enterprise data actually resides in the ERPs and CRMs inside the enterprises. That access the tech giants don't have, which means that the B2B tech startups that we are investing in have the opportunity of building the GenAI applications for the enterprises using their data. Now, if you look at the stack of this GenAI, you have the GPUs, the LLMs, then the industry layer, and then the company layer. We advised our companies not to focus on the GPUs and LLMs at all, but if you're industry experts, go to the industry data, go to the company data, and so on. As a fund, we always have to worry about, now that we say that this is the space, who's going to be the winner, correct? Very interestingly, two things came out. One is, and this was very much relevant in Ajay's talk as well. See, earlier software used to be code. So you could write the code, you could own the code. Now you're talking about data, which is owned by the customer. So what are you talking about? Can you really own the product? And that's what, the realization came that because you are not going to own the entire product, you are going to build some platform, you're going to build some guardrails. This is actually going to be a services play. It's going to be not product companies as we had in the old time, but services people who are building solutions for the particular enterprises. Now, this is a change that funds have to consider, that now we are looking at investing in services companies, or solutions companies, I would say, rather than product companies. But the second most important thing, of course, they have to be great in Gen AI, like Ajay talked about. Second most important thing is they have to have domain knowledge. Without domain knowledge, enterprises won't even let you stand and do something for you. And that gave me my second counterintuitive conclusion, and I made it in a clickbaitish kind of a way, that the founders in the Gen AI space have to be 40 plus in age. Why
40
do I,
plus.
40 plus in age. Why do I say that? Because there is no shortcut to domain knowledge. You've got to spend those 15, 20 years in the industry to get that domain knowledge, then you can build. So now you will probably getting an idea of how we are differentiating ourselves. And let me tell you this, in our fund too, we have made 8 investments. All of them meet this description. They are not only in their 40s, they are the go-to experts in their space. And that's why we back them. So that's how we are differentiating.
That's interesting. And that really is something which I'm wanting to sort of understand. If we draw a comparison of generative AI to, say, e-commerce, for instance, right? So there's this big daddy, then there's a middle layer, and then there's a lower layer, right? So I really want to understand the VC or the PE mindset targeting these technologies step by step. And let's talk to an audience which suppose doesn't really in a language which people understand. So if AI were a country, India AI is a country. So the infrastructure, the roads, the railways, the airports is taken by OpenAI, Microsoft. The next is maybe Apple.
Like I was talking about earlier, that there is a GPU layer which is taken by the NVIDIA.
Yeah. So I'm not coming to
Yes,
that.
yes.
So the country, the roads, the infrastructure is taken by the big tech, right?
Yes,
They will fight
yes,
amongst
yes,
themselves, right? And then comes the houses. In the houses, who are the people who've occupied the houses? Can we name top 5 builders coming out of India? Like the way you have Prestige and Sobha and those builders. So who are the house people?
So let me answer that in a different way. You're talking
Yeah.
about houses.
Yeah.
So you're talking B2C. B2C is where you have those winner take all, you have those top 2 or 3 or 5 or whatever. If you're talking B2B, there is a great chance for smaller players also to pick their niche and become successful in that particular niche. And that is probably what is more interesting to the enterprises here as well. That they don't have to go, I mean, yes, the infrastructure will be taken by the 3-4 big players. It's just like cloud. Cloud, you have 3-4 players. Their offerings are also not very differentiated. That's what is going to happen with LLM also. Where you differentiate yourself is that industry layer. If you are expert in that industry, you have access to the proprietary data of the industry, or in that company layer where you're building on top of the company's data. That is where, based on your domain knowledge, you're taking that LLM, building as SLM, or fine tuning, or doing the RAG or graph RAG. That is how you are creating products which are better than the larger giants, because now you're not hallucinating. You give a small problem to a large LLM, you're going to hallucinate. What enterprises are interested in is correct results. I mean, your OpenAI can give you, or ChatGPT can give you a poetry, correct? And we are very impressed that it writes poetry. What is the interest for an enterprise in a poetry? They want reliably correct outcomes.
No, we're
So that is
talking
where
about the
smaller-
opportunity here.
So yes, so the B2B players will always find their opportunity. They don't have to be in top 5 is my answer to your question. The houses and the examples are great examples, but these are B2C examples.
Okay, what about you, Davesh? How do you see this map? Give me the construct of the AI opportunity as a map, if it were a map for this country.
Right. So I think you have partially covered it by saying that the big guys own the infrastructure. And just to expand on the example that Girish and you were discussing, that if houses are the if houses are the D2C brands, I would say the B2B opportunity lies in being the EPC contractors, right? Where there could be multiple, where you don't need big money to build the brand, but you would still be servicing the big builders. So I think that I would say is the missing layer in the description that you gave.
Okay, the road, railway infrastructure is taken care of by the big tech. The houses are the large B2B companies, you're saying, and the startups would be the EPC contractors servicing the B2B companies, and that B2C, B2B businesses, and that is where you all come in,
Yeah, so
looking
I
at
mean
that
the
play.
EPC contractors being the B2B services company.
How are you looking at the landscape?
Well, if I were to go in the same metaphor, I would say that let's go down to who's staying in those houses or societies. Okay, so there could be people who want pure veg food. Okay, there could be people who are for elder care living. So the requirements of each of those are different. So when I'm looking at elder care living, I want a hospital, I want constant checkups, I want a different type of food, I want a different ecosystem. The people providing the ecosystem would have local language, local knowledge, which would not be, can't be generic. So that's where the play comes in that when you look at, let's say that I'm doing something on the medical field is a very large field. I can say, okay, I'm trying to do something in terms of having, using generative AI to perhaps look at or adding on a RAGs layer in terms of saying, how can I look at the radiology output quickly? Now that's a very specific use case, and there that's where and I buy the part that you need to have domain knowledge. That's where you can differentiate, and we incidentally have the same age bias, and because the same part is that when you're looking at corporate governance, the fact that you have to file something like a PF or a PT or look at certain compliances of what happens if you have a GST default. All of those things comes with experience. It's not that when you start off, you are immediately born. There's no course which happens in a institute which says that when you pass out with flying marks, you have known all of these check boxes.
So basically, AI is a country. The infrastructure opportunity is taken by the big tech, and the opportunity which lies in buildings, EPC contractors, people who live in their houses, and then comes your fancy stuff, the restaurants, the pizza providers, the cafes, the nightclubs. That is like a different thing altogether.
If I may just add on to this, also what we forget is that you have data. If I look at pure AI construct, you have data, you have infrastructure, then you have the algos onto it. Now, for anyone who's doing big tech, they have a certain cost. The data centers take space, the data centers consume a lot of electricity, they consume a lot of water. Now, is it something which can be priced what the others require? The larger corporates can, but the smaller mid corporates can't, which is where the MSME place comes in. So that solutioning at the cost price, which is relevant, becomes the play to look at.
Okay. I also have this question that there are already very large companies which are homegrown internet companies valued at multi-billion dollars. Suppose you take example of quick commerce, for instance, or you take example of fintech, for instance, and in every space that you talk about in this country, we have number 1 to number 3 players. Most of them are VC funded. Now, generative AI, agentic AI, the new wave of technologies have come in. So, will we see the next incumbent or the next large company a generative AI company, or will it be a layer of generative AI on the existing large companies? When what is it? Will the phone pay become a larger phone pay with a bigger use of generative AI? Will a Zepto become a bigger Zepto? Or will Jeff Bezos say that, listen, enough doing with Amazon, I'm done with it. Now I'll start a new generative AI and that becomes a big tech. So what is the thinking there?
So first of all, I think that I would say before DeepSeek, I think the general advice to Indian companies was not to get into LLMs because that was too costly. Let it be built by somebody else and you can build on top of that. But I think DeepSeek changed that. I think the democratization was a word used somewhere. That gave the opportunity that people can do in those layers that I talked about. Some work can now be done in the LLM. But even those, we don't advise our younger B2B tech companies to do that. This is the job that these large e-commerce companies that you talked about, because these are large B2C companies in India who have lot of contextual Indian data at their disposal. And they can do this piece. They can definitely Indianize the LLMs to their purpose, and they are the ones to do that, not the younger B2B tech companies that I was talking about.
Right. I mean, I think what they're doing would remain core to their business. My sense is the use of AI would be around the internal workflows and not so much around the output that they're delivering to the customers. We all are keen to see that would the cost of technology teams would come down now that more and more companies are using AI for code generation. So, especially with the examples that you gave, I think AI would be more of an internal usage and not really for the customer.
Okay, what about you, Ashish?
You know, if I were to say, there are see, India has two different peculiarities which are different when you look at the different part. You have perhaps the cheapest internet in the world. Okay. The second part is we also have a large population, which means when you look at things on scale, and we have a very diverse, what should I say, culture. You go from one state to other, it's all different. So we were talking of in terms of, I was saying in terms of the local language part. So if I look at, say, the cow belt, you may have Hindi so-called written, but if I look at even in, say, places like Bihar, you may have Maithili as a separate part, language. Now that's something which can be localized, and then the question comes that are there sufficient users which can make it a viable business model? That's a separate part. The other aspect which comes into play is that democratization of data or democratization of any of technology use is available to us simply because, like I mentioned, you have internet, you have large IT infrastructure which has been there serving the world for a long time, which if you were to look and say in Africa, they have the problem in terms of how to get access to such infrastructure, the data part and others. The other key thing which will come into play, and which is where you'll find a lot of players coming in, is the human layer in terms of understanding the use of AI, because which is critical in terms of saying that the hallucinations, the errors which crop in are negated out, because someone mentioned that what happens when you're using it for a legal part or for a medical part, there you cannot have it without a human intervention, a human oversight coming into play.
Okay, I want to sort of bring you in, Anirban, here that for startup founders who are basically getting very sort of overawed with this word AI, because every startup is .ai now. What are the key 3 or 4 things that you have to keep in mind from a policy perspective? Because just recently we have this expansive technology act that we had. So what are the things that you have to really keep in mind?
Great question. Very, very funnily, the IT Act in India is as of 2000. If you do a search on that IT Act, the word internet is not mentioned there. So the laws have sort of to catch up a lot in terms of the base laws. But for startups who are looking at this, see, there are 2, 3 things which are globally being looked at, and the government of India is also looking at it. We are sort of working with a few companies, so I'll share those insights. I'm sure some of you are aware that the ANI has sued OpenAI for IP infringement, basically saying that effectively, if you are reading all my news articles and then you are profiting out of it, that is a violation of my intellectual property. That case itself is going on in the US with their different news agencies. So intellectual property is something that a lot of traditional businesses will guard, and that takes to your point with respect to B2B data. Business data will become a gold mine going forward because public data is now being guarded. It was put out for fair use. This is not fair use because this is commercial use. So for companies who are looking to use AI, one, you'll have to look at what is the data source that you're looking at, right? That becomes extremely important because tomorrow your business cases would be looked at by gentlemen here who will say that, look, this business is susceptible to challenge, so let us not invest there. Or what are the guardrails you have built around getting intellectual property rights to build. Second is data provenance, which is the data quality bit. There, I think SEBI last week has come out with a paper on using AI for SEBI regulated entities, RBI has its Open AI committee, Free AI committee rather, going on, where we are representing in front of RBI for a lot of multinational companies. I am one of those people who really does not like, care a lot about hallucinations, simply because as humans we hallucinate. Uh, we misremember a lot of things, saying us din hua tha, but it wouldn't have happened. AI can't be any different that way. What comes in are what are the processes you have built, right? Effectively, if you are building on the top of the base layer, what are the processes you've built? What are the checks and balances that you're going to bring in, right? Very interestingly, there are use cases that large companies are doing, especially in the health tech sector, which can prove to be transformative. There are a lot of, and again, this takes to the point around our population, right? We as a country, I think, have one of the largest troves of B2B data available to enrich the training of AI. Especially in the medical field, what's happening is a lot of de-identified data is being used. Effectively, that gives you a sense about a medical condition before the medical condition is actually kicked in, because it looks as contextual data. Indians may have a different sort of gene type, gene structure with respect to say Caucasians, and therefore whether you're pre-diabetic or not depends on a lot of blood tests that is read by this AI, which is all available with health companies, healthcare sector companies, right? So how do you monetize that data? And that comes into the services aspect of your business, right? Yes, can you do timeshare as the government of India is proposing to do timeshare of GPUs in India, which is sort of started off to build their own foundational models. Great point, but both of them can work parallelly.
Yeah, so I think we spoke about the opportunity landscape. I mean, you spoke about the fact that there's enough and more juice in B2B companies. And I think it's about time that we have to really, really change our mindset from a very product oriented mindset to large companies being built in the services space, especially the AI solutioning. Right. You spoke about the fact that Shrija, there would be these large consumer facing companies and a lot of AI workflow internal is where the use cases lie. Like, how do we keep the cost of talent low? You spoke about the fact that perhaps a very interesting use case is emerging in the vernacular side, just given the diversity of this country. I mean, within a state, we have different mini states altogether. And you spoke about from a policy perspective, that what should a founder keep in mind? And more importantly, what should an investor keep in mind when you are investing in some of these technologies? Because I think the way the IT Policy Act is right now, there are various kind of repercussions if both the founder and the investor does not really understand the policy documentation. I want to understand and talk about really where the moolah lies, which is the fundable aspect. What really is fundable and what is non-fundable when it comes to some of these new technologies? It might look very, very overwhelming, very, very interesting. And for somebody, when I speak to these founders, if everything is being built on ChatGPT and GPT is the foundational model, then how is one different from the other? That is the first question. And second is that all of us had a revelation only when these Chinese kids made a banger product like DeepSeek, and we started asking our boys, "Tumne kyun nahi kiya? India se kyun nahi nikla?" Right? So I was very right when I began by asking all of you that what is the layer that you are looking at in AI? It seems to me that the infrastructure piece is outsourced to the big tech. The middle layer, so are the VCs only looking at the low-hanging fruits? Where will a SoftBank invest in AI? Do we have a large company like what Sachin Bansal built in Flipkart that a SoftBank can come and say, I'll put a Series D check? We don't have that in India yet. So maybe it's a journey. And if you were to name maybe top 5 AI companies coming out of India, what would those be? And on what grounds are you meriting them, on judging them? Because what I'm understanding from him also is that and somebody asked that question, that if everything is being built on GPT, then boss, I mean, like, what am I really providing? I mean, the infrastructure layer is by somebody else. I'm building on top of it.
I mean, this is I think, a philosophical question. Whether India should be building semiconductors or not, for example, or do we use semiconductors from somewhere else? The question is that every country will have to have its own specialization. And if we don't have to be shy about what our specialization is, uh, we don't have to be self-sufficient in everything. So that doesn't mean that we have to build the fabs also, we have to build design the semiconductors also, and so on. We were very happy to build our IT services business, which took India quite forward, even on that infrastructure that was semiconductors, which is provided by somebody else. The same could happen in this space also. There is a possibility that because of the Indian languages and Indian diversity and all that, there is an opportunity for somebody to build Indian kind of things. And I think Krutrim is trying to do that, Servam is trying to do that. And there are possibilities of doing that. But even there are going to be 2 or 3 companies like that.
The large companies.
The large companies. There is a bunch of work that needs to be done that requires, for example, Gen AI, because of its language diversity, will bring so many new Indian people into the footprint of technology who are excluded so far. These are huge problems to be solved, and these are not going to be solved by somebody outside of India. So I worry about those problems more, that what can be done in terms of taking, let's say, healthcare to the remotest part of India. Those are the problems that we need to solve, rather than worrying about having the entire piece being done by us or not. We can very well rely on others to build the infrastructure, but we have to solve our own problems, which are quite big in terms of education, in terms of financial inclusion, in terms of healthcare, for example. So those are the places that we could really create solutions. And indeed, those solutions that we build in India, which are frugal, which are based on Gen AI, can have a market in similar countries outside in the globe as well. So it is not just an India play. What we do well in India can very well have a play globally also in multiple other countries. So those are the opportunities that I'm more excited about.
I can just see the opportunity brimming in the eyes of the VCs. It's like the new internet altogether. AI, which has really unleashed such a huge opportunity for you all. I mean, there's language, there's B2B, there's services, everything.
There's a lot of excluded people like I was talking about. And I think Ajay made the point about human in the loop. Correct? I mean, we have one company in our portfolio, AI in radiology company, Deep Tech. When they started out, people were saying, what are you guys doing? There are other companies like Zebra in Israel who are doing everything autonomously. Today, Zebra is nowhere, but this company with human in the loop is doing really well. So that human in the loop is really a big opportunity for us, because AI is not there yet, frankly speaking. AI is not producing the right outcomes for the enterprises, and that's why you actually need a combination of AI agents, human agents to get that loop closed and get the solution, which solves a big problem for India of employment also. So why I'm excited about even services is because the whole automation, complete automation is actually not working, and not for India also in terms of the job opportunities that need to get created.
No, I mean, definitely. I think it's being built on data. So, I mean, I can talk about, so we have a section where we do a startup idea every day. And now with AI coming in, it actually, you just think of something and it actually can happen, right? So AI in healthcare, AI in fintech, AI in e-commerce. I think we have spent quite a bit of time in opportunities. And that is exactly what happened when opportunity is so presenting itself in such a huge way. There are challenges, right? There are challenges which people tend to overlook, because we have all have gone through these waves. There was an e-commerce wave. Every company which was e-commerce was getting funded. But then unless SoftBank came to the picture and said that nothing doing, only one will survive. Because the one who will survive is the one who has raised the maximum capital. If you have raised the maximum capital, clearly you can hire better people, you can spend so much on marketing. So basically that money is essentially has chosen the winner. In AI, what will decide the winner is the question I'm asking. Will it be capital? Will it be the product intelligence? Because if the product is being built on ChatGPT, so who is the winner is my question. Can VCs answer that?
So
You're taking an attempt at that.
It's very clear that you're very fond of startups. So
Yeah.
no, but jokes aside, I think again the examples that you gave, that the large consumer brands of today are the ones which have been heavily funded or the most funded. Others have fallen by the wayside, and that's true, but it's true more for D2C business, right? A consumer focused business. And again, at times, if you look back, some of the business models which seem pretty bizarre at the time that they started ended up being successful just on the back of more and more funding. And there's nothing wrong with it, right? I mean, to change consumer behavior, it takes time. So certain profitable businesses of today, you wouldn't have imagined 5 years back that they could ever make money, right? Because the use case itself seems flimsy. So there is a lot of importance that any consumer focused businesses would put on the capital. And yes, it's true that at times the only differentiation is your ability to raise more capital. But things are different when it comes to non-consumer businesses, right? I mean, we invest in fintech, we invest in health tech. Uh, our startups are usually serving businesses, right? As of now, we don't have anyone in the portfolio which is direct consumer focused business, and these startups, I think the traditional qualities that you associated with founders 10 years back, 15 years back, when the VC wave hadn't emerged in India, those qualities still hold good, right? I mean, the only difference that has happened with time now is that the technology cycles have shrunk. Distribution through internet is free for all.
Yeah.
Uh, what it what it means is that the kind of qualities we look for in founders few years back is not the same. So here, this is where I slightly have a different view than Girish, that um, 10 years back, we would look for founders who are coming from the relevant domain because the domain expertise was very important. Um, but now our criteria of founder market fit is a little different because we believe that the products are going to evolve. Products won't change. The markets would change. The consumer habits would change, and being in India, the regulators would change. The kind of regulation changes that
Yeah.
happen overnight. So the founder, apart from him being obsessive about solving that problem, he needs to be very flexible. He needs to be technology native, especially when it comes to the new age technologies. So the criteria for how we choose founders have kind of evolved with time.
Very good points. A beautiful point on sort of founder market fit. I come to you now, Ashwini. And I think we spoke about opportunities, we spoke about challenges, founder market fit. As you are sort of evaluating companies, because you look at a little more mature stage companies than both of them, what really are the 3 or 4 sort of common red flags which are perhaps repeatedly appearing, which are sort of telling you that your investment decision you will not make there? Are there any so 3 or 4 common red flags?
Okay. See, what makes a company or a business model successful, by and large, the DNAs remains the same irrespective of the stage. But in our case, one of the things which we look, especially if I'm looking at AI or the part, is it an actual problem you're trying to solve or is it a perceived problem? So if it's an actual problem, which means the end user would have kept aside some budget or would not have to be told to that he needs to keep aside a budget. So say, for example, say it's hospital record management, say it's radiology, radiograms analysis. Now all of those, if a hospital or any other institution has already kept aside budgets because they want to optimize the workflow, which means it's a real problem they're trying to solve. They're trying to solve it a little more efficiently. Hence, the final crux comes down in terms of how efficient the founding team is in terms of two aspects. One, in terms of agility to change with the market dynamics. Second is in terms of being hands on in terms of the execution part. Because that at times makes the entire difference between a great plan and something which did not take off.
From a policy perspective, you spoke from a founder's mindset. Now, what are the 3 or 4 things which perhaps investors need to keep in mind?
Uh, I think in 14 years of sort of doing this, I have seen investors shy away from businesses that work on the arbitrage of gap between two laws. This is in the gray area, and therefore a business is built out of it. That business is never sustainable. That business is always has a disruption risk or a shutting down risk, which you've seen a lot in fintechs. Right? Working on the gray area is always a bad idea. No, I don't think an early stage VC or a PE looks at the most beautiful contract that a company will have. What they will, however, look for is hygiene, right? Have you been attempting towards doing something? You don't have to have the best contracts, but are you looking at limiting your risk? Say limitation of liability, simple things, right? They would say that, the contract is bad, we can fix it later. But are you taking more inordinate risk being a small company than you should be? That shows discipline in the minds of the founder who they are investing in. Because remember, smaller companies are always founder driven, right? So that sort of starts at the top. That is there discipline? B, what is the business model? Is it on a actual sort of problem, or are you playing on a regulatory arbitrage? The third thing is, what is your vision on scale? And we've seen that with a lot of sort of investors when we talk with them. And look, there are multiple contracts, right? We've seen investors sort of putting in large checks with only 3 contracts where they see a deeper relationship as against superficial 15 odd clients, out of which you'll show an order book of 15, 20, but out of that actual revenue is coming from 2, 3 people. Everybody else is long tail, right? So again, focusing on your customers, if you're a B2C or B2B company rather, focusing on your customers, having a proper business model and having discipline is what, to my mind, attracts most of the VCs and the Ps around the investment.
Okay, I think this will do like a last round here. I think very, very thought provoking, which actually made you guys think to answer. We did that. Now I think we'll do like something which is very, very easy for you and you do on a daily basis. Like, define an ideal founder, something which is an instant red, like green flag, and which sort of hits you that no, this person or he or she has the right characteristics. What would that be?
I'll talk about my stage of investing. First of all, solo founders is not something we back that. No rule against it, but typically it's a 2 or 3 kind of founders because they need to have a mix of skills. And one is, of course, the business hustle, the savvy about business. Second is the technology, because technology is the biggest disruptor. And third is the domain knowledge. So we look for a combination of these skills among those 2 or 3 founders. If one founder has that, great, but typically doesn't, so there has to have 2 founders. And the second thing, as something was mentioned earlier, the things are changing so fast that the founders have to be nimble about, they must be listening, first of all, to the market. It cannot be, and that you must have seen everywhere, right? I mean, people show us 5-year plans, and the one thing that I know for sure is anything other than that 5-year plan is going to happen. That 5-year plan is not going to happen. That you all know, right? Because early seed stage companies will always pivot. And how does the pivot happen? Because they are listening to the market. They come up with some idea, everybody comes up with something, but they're listening to the market. That's what we really look for. The winners are not going to be something that come with some hardwired skills, but these basic 3 skills that I talked about, but the ability to listen to the market and accordingly change them.
Devesh, I'll come to you now. I mean, how do VCs also upskill themselves? Like you said that, Shrija, things are moving so fast, the founders have to be agile. How are VCs being agile in terms of knowledge? I mean, do you exchange notes with large companies like, say, a Jio in India could be an example, or is there do you have networks, cross-border networks? So how are VCs also differentiating themselves in the aftermath of these new technologies?
Right. I mean, I can tell you about what we do, right? So we ideally like to spend a lot of time with the end consumers or the end customers. For the kind of companies we invest in, whether fintech, health tech, for them, banks or NBFCs are often the end customers. For health tech companies, hospital diagnostic chains are the end customers. So we can't upskill ourselves with the technology. We can't learn coding, right? That competency we just don't have, and nor we want to build upon that. So we try to understand the pain point of the customers better by constantly interacting with them, by understanding, which are the functional areas they are investing in, what are the companies they are looking at, what are the problems they're trying to get solved through startups. So for us, that is how we keep ourselves updated.
Speaking with the customers is like something which gives you the real picture.
Absolutely.
Okay. Ashwani, I come to you now. I mean, you're taking larger bets on companies and especially technology, and you have a fair amount of technology also in your portfolio, right? But you are somebody who comes from a financial engineering mindset, not necessarily a tech product mindset. So the question I have for you is like Devesh said, he's speaking to customers. Do you think that as the investing becomes more and more technology focused, it's worth your while to maybe get a tech partner or the tech expertise cross border? How do you solve for some of those gaps in your internal composition?
Well, there's no right or wrong answer, like the one which you asked about what's an ideal founder. It's like, saying what's your ideal partner. Okay. So in our case, to find out the right set, you look at some things in common sense. But from a learning perspective, we always try and see that at least a few days in a month, are we listening on to certain people who are industry or knowledge experts. So it would be perhaps say also interacting with some of our professors at London Business School or some other places, or at the IITs, other institutions where there's some cutting edge part. We do have the courtesy, the London Business School Connect, access to different. So if I'm looking at something out of Tel Aviv University or in China or any other place, then you know what is also happening on a broader landscape. Is there a right or wrong way to do it? We just try and look at data, try and look at this information, try and connect the dots, if you were to say that, okay, this is where some things may be progressing. And when we're speaking with founders, because they come with their own interpretation of what could be the right solution, then you try and see that, okay, is it something already discovered? Is it something the world is moving to? And most importantly, like I said, is it an actual problem being solved?
Okay, I have a last question for you, Anirban. You are interacting with so many people, founders, investors. Do you see differences in investors who have earlier been tech founders vis-a-vis those who are just like people who come from a financial background? You think the questions are different, the ability to spot a tech company is different? Can you sort of identify some of these subtle differences?
It will be an unpopular answer, but I actually feel that people who don't come from the domain come with a very fresh perspective. People in the domain, and again to use the AI term now, have their own biases. So they would want to they would want to backseat drive. But people who do not come from the same domain actually have a very good perspective, good understanding on how that can be adopted somewhere. I think that's how where sort of lawyers also come in on most deals, because we are not experts. I would suck at math and therefore I'm a lawyer. But you would look at businesses very differently from that perspective, right? It's not a risk perspective, but we've seen it differently. It's a different angle, and therefore, to my mind, those PVC sort of they look at founders and they look at the businesses in a way where it can succeed rather than sort of critiquing the tech. So to put it again, very unpopular answer.
Okay, now it's time for rapid fire. And I'm going to begin with you. You sort of gave me a lot of these answers or in AI as a country and everything. So I have two questions, very simple questions. If you were to name one company which you really, really admire, what would that be? Your anti-portfolio. Something which is not in your portfolio, you gave it a pass and you said, oh, wish I would have just invested in it.
So far that has not happened because we are seed stage, so they have not gone public or anything like that, so that has not happened. But a different answer is that I really admire not a startup, but the whole DPI, DPG thing that India has built. the India stack that it has been built. So it is not by any startup, but it has been built by Nandan Nilekani and those kind of people. That is something really unique that has come out of India. And we really look at that as an opportunity to build on top of that. So that is something
So you
really differentiating.
conveniently dodged my question.
Yes.
From a startup, you gave the answer of a public infrastructure. I come to you now, Davesh. Maybe I can get an answer from you. Come on, I think there are VCs who are actually mentioning anti-portfolios on their website. So you can mention one.
Right. No, so I think I won't name the company, but I'll give enough hint. I mean, we met this company almost 1.5 years back. Very smart founders. Um, One of them was just out of Oracle, the other from Google. We couldn't understand their product in entirety. Um, we really loved the founders, but we just couldn't build conviction on what they were building. And in a couple of years, that company eventually got funded by Meta and all. So,
Wow. What about you, Ashwani?
So, uh, I'll go by the first answer on that. But there have been cases wherein we felt that if we could have had a bigger check size. So I'll mention a company in logistics, which not logistics, I'll say in terms of which was looking at optimizing routes and stuff. So which looked at India as a part, given our chaotic transport situation, and all of us would have suffered in the morning coming around on a daily basis. And then they are doing it today across 42 odd countries. So when we looked at them, we did not have our India Growth Fund series, which looks at bigger ticket size. They wanted a bigger ticket size. So that was a case wherein I would say someone's used AI in the right sense on the data part and then have done on that. So
I must say that this conversation has been like full of revelations. We have had like VC coming and saying we couldn't understand the product. We have VC talking about the opportunity sort of landscape, what we understand, what we don't understand. And that was the real purpose of this conversation. That we get you questions to think. Now the lawyer will answer. But the lawyers will have a standard answer. We advise on them.
We advise everybody, but I'll sort of take on Mr. Dinesh's answer. I think the biggest, and I'll sort of answer it in two parts, which I admire. The government of India is the biggest tech startup in the world, to my mind. Digital public infrastructure is just, it's at a different level of how it can be used and what the use cases are now. So we are advising them confidential, but the use cases that are going to come out in the next 1 year is going to surprise everybody. We probably will not need a wallet. We will not need a phone. We will just need to walk into a foreign country and be able to pay. Right. I don't know how many of you know there is something called DigiPin, because the government of India realized that pin codes in India are most inefficient. You will have to give directions manually. There is the India satellite constellation, which is going to give a digital pin to each address. That has use cases from land reforms to e-commerce to any quick commerce. Right? So again, the other sort of idea that I will leave you with is a company that is a very long-standing client of ours, is Amazon. I think they have 7 leadership principles. The first principle is actually something that I admire a lot. Is still day zero. It's still day zero. We are still a startup. This is still the first day. Right? The mindset is it is still day zero.
Thank you. Yeah.
I'll just add on one thing. Since we were mentioning the government, we were one of the earliest investors in defense startups. Okay, and all 3 of our defense investments saw action in this part. And a lot of people do not understand. So if you look at a globe, it's round, right? But when you look at a map, it's flat. So there are errors which creep in, today, the efficiency on the missiles and others comes in because you're using data which is local satellites, local part. Hence, the pinpoint accuracy is to the extent of a meter, which earlier used to be that it will be 3 to 5 meters. So which is what comes into play. And this is coming in because the government is using multiple data points, multiple infrastructure and others, and perhaps one of the best uses of AI, and you come to know when you sit through some of these that this actually an AI which is there, fairly deep tech, but not obviously known at multiple levels.
See, I think I look at this panel as people who are really the nation builders, and we are all very proud Indians. We are proud citizens of this country. And I think we all can really sing praises on what the country has done. And I think when I went to London for my Chevening Fellowship, I think it literally was the cynosure of all eyes. I mean, what we have done with our UPI. Everybody was marveled by it, that how we have been built it. And I think in London being a place which I was so admired by how closely they work with academia. And I think that was something which really left such a lasting impression on me. And that is exactly when the entire ecosystem comes together. So there are capital providers, there's startup founders, there's academia, and that is when everything comes together, a nation gets built to the extent. So we are all very, very enamored and overawed by what this country has built. But as nation builders, if you were to do like a 2-minute dispatch to the Honorable Prime Minister on what we can do better as a startup nation or as a country building in AI and technology, just a short answer, what would that be?
For me, it will be the inclusion part, because I do believe that Indian population, Indian demographic is actually a strength. And if we can get as many people into the mainstream, in the chances of India doing better increases. And our cricket team is a great example of that. Everybody talks about that. That, we started winning World Cups only after the Najafgarh and the Ranchi people came in, right? So that is what needs to happen. And technology can do that. So that is what I'm really looking at. That
Inclusion. What about you, Davesh?
Our suggestion would be to tame the regulators. I mean, just the amount of
Absolutely.
Generally, just the amount of intervention these bureaucrats do, whether it's in the fintech sector, forget fintech sector. I mean, we are a registered SEBI fund. They come up with new regulations, new compliance requirement every third month. I mean, it's almost like you have to hire a compliance guy, a full-time compliance guy. So I think if the regulators could be in check, that would be useful.
Well said. What about you, Ashwani?
I would say that, when we have such a large population, such a large country, one of the ways people move up above the poverty line and move up in terms of their own wealth creation is in terms of having quality education, even in tier 3, tier 4, tier 5 towns. So you don't have cross city migration. You have the ability for a kid even in a tier 5 town to have the same chance, if he or she is bright, to compete with a person out of a Delhi or a Bombay. And I think that alone will allow a lot of talent also to emerge of either gender in other places.
Okay, what about you?
Principles-based regulation, not prescriptive, to allow innovation.
Well said, principles based. But I must say that the VCs have been very, very forthcoming. Yeah, great. Can we please hear it up for this panel, please, who really sort of spoke with such clarity and spoke with such sort of open-mindedness. Questions? Do we have questions from the audience we can take?
I would like to get Sir's views on the DPDP Act and its rules and how it would impact new MSME startups. And more importantly, what new opportunities would it create for the upcoming startups?
I think we have a masterclass later on that, but I'll just sort of give you a short answer. That law is one of the first ones where we have a principle-based legislation instead of prescriptive. But that's a very different regime from what is there today. Unlike the EU, which sort of controls how you operate, it gives you a lot more flexibility. Great opportunities. I mean, one, there is obviously a compliance layer that will have to come in for MSMEs. Personal data has to be looked at very differently. We as Indians don't regard personal data to be of much value. That sort of is going to change a little because there are significant fines around it. But there is also a business opportunity in terms of being a consent manager. Like an account aggregator in the fintech sector, there is something called a consent manager. That's a great business where you effectively are the layer between the person who's collecting and the individual, and you manage consent on behalf of individuals. So that's actually a great opportunity within the Act also. They have prescriptions around who can apply, who can't. But yeah.
I think we have a master class with him later on that. Yes, we have a question.
So, all of you mentioned a lot of industries, fintech, AI, etc. There used to be a word called G-Tech, government tech, and I'll tell you where I'm coming from, right? The biggest client or enterprise, the biggest consumer in this country is not Reliance, it's not anyone, it's actually the government of India, reflective of our GDP. So the question to the investors is, and be very honest about it, if there's a startup which comes and says, I'm 100% exposed to government contracts, do you actually go with them or do you go away from them, and why?
We have invested in defense startups. They are entirely government, right? So you may have offshoots which may have civilian uses, but they are there, and we are very happy to invest in them because of one specific reason. If it is a mission critical part, you always, unless your country fails, in which we are all doomed, right? So leaving that piece aside, the payment will always come. So the viability of it is there from day one if they are able to do it. And there are so many stringent norms and processes and steps which goes by that if they have reached to that stage where they're getting a government order, which means they've already achieved viability from a product or a service perspective.
I would just advise that company not to be 100% dependent on government. 50-50 is fine. So if we don't have a bar on anybody dealing with government, but for their own sake, I think they should have diversified to private customers as well.
So the question actually comes from the fact that the biggest use cases of disruption, and I'll also kind of circle back to some of the other technologies which came up like blockchain, we're talking about decentralization, things like that. I mean, the government was the, land records, etc. It was such a straightforward use case, right? So why is the adoption always dependent on private enterprises who have so many ifs and buts and ROEs to do when we have so many problems, as you correctly, identified, to solve? But that is a more philosophical question. I was more thinking, of course, defense startups are great, but what about pure IT? Do you find the government organizations have the quality of product UI that you would probably expect from a unicorn? The truth is it's not. And why?
But there are examples, right? TCS built the passport system, for
Exactly.
example.
Yeah,
So there are examples like
yeah,
that.
yeah.
You cannot make a general statement like that. Infosys has made the tax return system.
Yeah.
Sure, thank you.
Any other question? Yeah, Anand. Yeah.
Hi, my name is Anand. I wanted to ask, the theme of the panel was a brave new world. And one of you mentioned that one of you didn't understand the technology, so you didn't invest. Now, funding, I understand, is inherently there's a caution that is involved in it. So how do you balance between being brave and being cautious? And do you keep a part of the fund for, probably riskier investments? You don't understand, but you feel that it can really generate a lot of value.
I think it won't be good on our part to invest in something that we don't understand. That is the frank answer. But there are ways for us to understand. I mean, it's not just the partners. We have a complete ecosystem. In fact, in our fund 2, the entire first close that we achieved was through successful entrepreneurs who have done the kind of journey we want our portfolio companies to do. So there are a lot of people to reach out to, and we take all the kinds of efforts to understand that. If something seems interesting, it is our job to understand that, and if we understand that, then to invest. I hope that answers your question.
But there's a question at the back. Yeah.
It's good to hear investors talk, and it's always about funding. That's what I've observed. How do investors help? Apart from funding, how do you really help or contribute towards a startup's growth? Apart from funding, what else can investors do apart from funding?
To me?
Yeah, you can.
To all, to all actually, not a specific individual. My question is to all. Yeah.
Okay. So it so happens that I was a founder before I started the fund. So I've been a couple of decades in actually building my business and then came into funding. So I don't have an investment background. And in fact, in that business, I had not taken any funding. So I didn't have any experience from the other side also. So it is entirely that experience which comes in handy. The reason we chose the seed stage and not any later stage is because we thought, all of us partners have the same background, by the way. All of us partners have built their B2B businesses and then come into fund. The reason we chose this space is the stage is because we think we could help beyond the money in terms of exploring. See, that stage is where the company is trying to get to a product market fit. They have not found that out, which means exploration, which means trying out various things. And that is where a lot of help is needed. And that's why a lot of companies tell us that the discussion they have with us are different from the discussion they have with some of the other investors. Other investors bring some other angles, no doubt about that. But even senior recruitment, for example, I've done some senior recruitment for our startups. So there could be multiple ways. The only principle we follow is pull works better than push. So we don't push onto anything on the founders, but they ask for anything, we have to be there to help them.
Okay. I think the time is running out. I'm so sorry. We have to get into the fireside chat with Bruce. Yeah.
Okay, so I just want to ask a last question to Giri.
Okay, I think Ajay also has a question.
Giri, you have mentioned like every country has its own like power and importance. So after DeepSeek happening, like startups, government, and entrepreneurs are much more focusing on R&D sector. But recent में we have seen कि server में they have copied the model from a French startup. But China has its own DeepSeek, US has its own ChatGPT, but Indian government सिर्फ 0.64% GDP का R&D में खर्च करती है, and now many startups वो भी R&D में खर्च नहीं करते हैं. So जो भी इन्वेस्टर्स हैं वो उसको कैसे देखते हैं? जब मैं फाउंडर से बात करता हूँ, दे आर लाइक कि इन्वेस्टर सिर्फ और सिर्फ रिटर्न देखते हैं और वो लोग खुद भी टेक्नोलॉजी में पैसा नहीं लगाना चाहते हैं. लाइक कि सारा जो टेक है वो सब सिलिकॉन वैली में ही हो रहा है, बट क्या इंडिया में नहीं हो रहा है? क्या हम लोग क्यों नहीं बना पा रहे अपना डीप सीक एंड चैट जीपीटी?
First of all, why funds are looking for returns is because we have taken money from somebody, right?
Absolutely right.
We have to return the money to them. So that startups have to understand it's not the money that is going in our pockets, but we have to return to our investors.
As a thought leader or like country building.
So now that is a much deeper question, and that goes to education, as somebody was talking about. We have to change things from school probably to create that research kind of mindset, that development kind of mindset. It's not going to happen overnight.
Government भी like क्यों नहीं खर्च कर रही है?
No, so there are, I'll just add to that question. So there are government funds which are on the infrastructure side. So infrastructure is a 10-15 year project. Okay, a normal VCP fund is a 7-year part. So either you have a fund which has a 10-15 year horizon, you have investors who also come with a 10-15 year horizon. Okay, because say if you were to build a ceiling, now building a ceiling will take you a few years. Before that you have clearances and other part. Then to optimize to the point that you are starting to pay back will take another 4-5 years. You're talking about 10-year clear cycle.
Right.
So unless that money is available, those kind of investors are available, there are always people, then whether it is VCP or whatsoever, we as investors would definitely love to look at that.
Okay, so
Yeah, just 1 second. Ajay had a question. Avik, yeah.
Hello. Yeah.
Sorry to interrupt. Just I think private enterprises also have a role to play here. When OpenAI was formed, Infosys Foundation, or I don't know what entity of Infosys, had given them few million grant, a few $1 million of grant. Vishal Sikka used to be on their advisory board. So I think private companies or enterprises also have a huge role to play here.
Well, that's a good question. And that's a point of like bringing the academia and industry and everybody together. Yeah.
Yeah. So fascinating discussion. I think a lot of focus of the discussion was that which is that layer on which we should be investing, right? Which we should be looking from India's strengths point of view. And I think as Mr. Gireendra correctly mentioned, the application layer, right? The application building layer. So you have the infrastructure layer, which is already taken by the big tech. Then you have the tooling infrastructure part, right? In that tooling infrastructure as well, India has a role to play because, that's not big capex involvement. And it needs deep tech expertise. So that's again a part where India has a role to play. And then there's the industry application layer. It could be B2B application layer, it could be B2C application layer, right? So B2B and B2C is where right now a lot of Indian startups, including ours, is focused, right? But going forward with the agentic AI coming into play, there's a lot of talk about vertical AI now, right? And vertical AI means take one industry or one domain and build the full stack of solutions to completely automate the enterprise, right? So an enterprise which is totally reinvented by technology, right from your foundational model to your data layers, to your application layer, to the evals and observability layer. So that vertical AI layer, and since you guys are in so many conversations with so many founders, Just wanted to know what is your opinion and what is your outlook on when some founder comes and says that they're looking to build or get into the vertical AI space and build for the next 15, 20 years of runtime.
So we have already invested in one such, so you have social media, which is across platforms. So we have a company which is focused only on travel. It's a company called Exploger, you guys can look it up. So where they have built, looking at people, it's like a Facebook for travel, to put it. So rather than going across a horizontal, you're going vertical.
Okay, so thank you so much for this much needed hardcore investor panel.